The Nasdaq 100 started the week in muted fashion, with markets closing early on Monday ahead of the July 4th holiday on Tuesday. The daily chart shows price remaining above the key trend line that we mentioned in the last video, around 15,170. Now remember, with rising trends, the support level is also rising with price. Price finished Monday near the unchanged mark, with the only highlight being Tesla, after the EV maker reported delivery numbers over the weekend which came in well above analyst estimates. This was not enough to push the Nasdaq 100 higher as volume remained light ahead of the public holiday. The stock market reopened on Wednesday, and you can see from the daily chart a reversal beginning, as price closed below this daily trend line in blue, driven by the Fed minutes, which showed almost all Fed members agreed rates needed to go higher, but at a slower pace. What didn't help was the private payrolls report on Thursday, which showed jobs increased by 497,000 when only 220,000 was expected. Off the back of the Fed minutes, this just fuels the argument that rates need to go higher to take some of the steam out of the US economy and what is a hot job market. As a result, both the 1 and 2 year Treasury yields jumped and are now trading at levels not seen since the financial crisis and the dot-com bubble. The 2 year is at levels last seen in 2007, and the 1 year yield is at levels not seen since 2001. However, if you look at this chart, since December 2018, the Nasdaq 100 and the 2 year yield have moved inversely. Well, that was until recently, where both the 2 year yield and the Nasdaq 100 have risen higher together. Prior to 2018, this was the trend. 2 year yield and the Nasdaq 100 tracking each other. You can see here the 2 year headed lower in May 2000 and June 2007. On both occasions, the Nasdaq 100 followed lower. If the 2 year peaks out and heads lower, we could see the Nasdaq 100 follow. Back to the daily chart, Thursday saw price briefly dip below this trend line in red, which comes from the weekly chart as shown here. Back to the daily time frame, and you can see price held the 20-day moving average as support before reclaiming the weekly trend. Today price remains around the weekly trend line after US non-farm payrolls report missed analyst estimates at 209,000 when the expectation was 240,000. However, average hourly earnings in the same report came in at 0.4%, slightly higher than the expectation of 0.3%. So that does hint at inflation pressures persisting. In terms of levels to watch into the close and next week, the weekly trend line in red is key, around 15,075. We're trading right on it. If we remain above it, price squeezes towards the daily trend line in blue, around 15,265. If we breach the weekly trend line in red, price has further support at the 20-day moving average, which is where price rebounded yesterday, around 14,976. Below that, and it's 14,845, followed by 14,665. Next week, we have the latest batch of US inflation reports with the CPI report on Wednesday and the producer prices index on Thursday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.